All right, everyone. Good evening, all of you. Okay, so everyone, in the previous class, we were talking about the company accounts, when we have learned the basic concept of the company account, like the meaning of the company and the various features of the company. Then we talked about the various kinds of companies, and then after this, in the last session, we were talking about the different type of share capital, different categories of share capital. And after this, we started understanding the issue of share capital. So I told you while discussing this that share capital can be, sorry, shares can be issued for cash, or it can be issued for consideration other than cash. If it has been issued on cash, then shares can be the payment may be received on lump sum basis. That means entire amount will be received at a time, and it can be also for the at installment basis. That means in this case, amount will be received from the applicants in the on installment. When it comes to the lump sum, it can be further divided into that amount is received at par or it may be at premium. All right, and then when it comes to the installment, there are various types of installment: application money, allotment money, then we have call money, etc. And if we are issuing shares for consideration other than cash, then it does not have any broad classification. It only have one element, that is share will be issued on consideration for other than cash only on lump sum basis, not on installment. However, it can be issued at par or it may be issued at premium. So we understood these things in the previous class. I hope everything that we discussed in the session in the previous session is clear to you. Now we'll move forward, and now we'll discuss the question based on the issue of share. So in the previous class, we already covered question number 1. We also did question number 2, I guess. And after that, okay, we need to, okay, we also understood the issue of share capital for cash on installment basis. Here, we understood that installment are of various types. First installment will be application money, then we will receive allotment money, then we will have the first call, second call, and so on. All right, so I hope these things are clear to you, everyone. Is it clear, yes or no?
Yes.
Yes, sir.
Then I've also told you that in order, if we have issued the shares on installment basis, then we will be passing the journal entry for all the installments separately. First, we will pass the journal entry for the application money. One entry will be done for making the application money due. Then the second entry will be for the receipt of the application money. So in this case, in case of application money, we will pass the journal entry as bank account debit to share application account. Then entry for the transfer of share application to the share capital will be done, which is called share application account debit to share capital account. In case of allotment, we will be passing the journal entry first for the due and then for the receipt of allotment money. So the entry for the due will be share allotment account debit to share capital account, right? And then bank account debit to share allotment account. And similar journal entries will be done in other cases. All right, so since we already understood case 2, let's do a question based on this concept. So we'll start our session with question number 3 today. We'll first of all talk about question number 3, and then we will move to the other questions. So I want all of you to read the question once. It says Akansha Leather Limited invited application for rupees 10 for 10,000 shares of 100 each. So this is the issued capital of the Akansha Leather Limited. And rupees 20 will be received on application, 30 on allotment, 20 on first call, and the balance on final call. all the share applied and allotted, all the money was duly received, you are required to journalize these transactions. Okay, so this is the information we need to solve this question. Just a minute. All right, everyone, see. So let's start with the solution of this question. Just a minute. All right. So solution to question number 3. So question says that Akansha Leather Limited invited application for 10,000 shares of 100 each. That means issued share capital in this case is issued shares by Akansha Limited is how much? 10,000 shares have been issued at rupees 100 each. 10,000. Face value is 100 rupees each. That means company wanted to raise total fund of how much? Company wants to raise a total fund of, tell me, 10 lakhs. Yes, 10 lakhs. Okay. Now, question further says that amount that company will be receiving will be on installment basis. For face value of the share is each share is 100 rupees. Company have decided to receive this amount rupees 20 on application, 30 on allotment, 20 on first call, and remaining will be on the final call. Right. So this is how we will be representing this. See. On application, we will receive how much? 20 rupees on application, right? Then 30 rupees on allotment, 30 rupees per share on allotment, then 20 rupees on first call, that means third installment, 20 rupees on first call, and remaining on final call. So there are 4 installment in which company will be receiving the entire amount of share. Last installment is called, always it is called final call. That means 30 will be the final call. All right, everyone, I hope this is clear to all of you. So in this way, company will be raising fund from the public in 4 installment. 10,000 capital against 10,000 shares issued by the company will be raised. Okay. Now, see, first, since there are 4 installment and we need to pass the journal entry for all the different installments, so we will first of all start with the application. All right. Let me pass the journal entry. The first journal entry will be for application on application. So for on application, the journal entry will be bank account debit, bank account debit to equity share application. Let me check which kind of share. Okay, so the variety of share is not given in the question. So we will simply presume that we must have issued the equity shares. We need to assume that we must have issued equity shares. So bank account debit to equity share application account. Share application account. Amount that will be received on application will be 20 on application. 20 rupees will be received on application. So that means 10,000 into 20, which means we will be receiving 2 lakh on application. All right, everyone. You can write down the narration as well, being amount received on share application. All right, understood. So this is the first part of the application for general entry. This is the general entry for the receipt of application money. Now we need to pass the journal entry for the transfer of application money to the share capital as well. So for that purpose, we will be journalizing it as equity share application account debit. Equity share application account debit 2 lakhs to bank account, sorry, to share capital. To share capital account, which will be 2 lakhs as well. And we will write down the narration as being application money transfer to share capital. All right, everyone, is it clear? Yes or no? This is the journal entry for the application money. Is it clear, all of you?
Yes, sir.
Yes.
So one entry for receiving and another one for transferring, right?
Yes, one for the receipt of application money, then we did an entry for the transfer of application money to share capital. Then, okay, so this is done. Now we'll move to the allotment. So for allotment, we need to pass the general entry as well on allotment. On allotment, general entry will be just opposite. First, we need to pass the general entry for the transfer of share capital, transfer of allotment to share capital, and then for the receipt of allotment money. So this time the general entry will be equity share allotment account debit equity share allotment account debit to tell me, anyone? To
Equity share capital.
sorry,
Equity share capital.
equity share capital. Yeah. Equity share capital, and what amount will be need to be what amount needed to be written? We have received how much on allotment? See, we received 30 rupees on allotment. That means we will be multiplying 10,000 into 30. That means 3 lakhs, right? And 3 lakh for this is done, everyone. Also, just do one thing. I think I missed this point here. So instead of 2 share capital, you should write this as 2 equity share capital. I'm sorry. Yeah. Now moving on to the next part. This is the general entry for the transfer, or this is the general entry for the allotment due. And we need to pass one more entry, which is for the receipt of allotment money. And that will be general entry for that is narration will be share allotment due, and then we will pass one more general entry for the receipt of allotment money. That will be bank account debit to equity share allotment account. Amount will be 3 lakhs. This is for share application transfer to share allotment money receipt being allotment money received. Done, everyone? Is it clear? Yes or no?
Yes.
Everybody, is it clear? Yes or no?
Done.
Okay.
Yes, sir.
Then okay. Now we will pass one more general entry on first call. General entry on first call. So first we will have to pass the general entry for making it due. First call due. A general entry for this purpose will be equity share first call account debit, right? Equity share first call account debit to tell me, anyone?
Sir, equity share capital.
Equity share capital, yes. Equity share capital. This is for the first call due being first call due. And amount will be how much we have received on first call. We received 20 rupees on first call. Okay, so that means we will be receiving 2 lakh, 2 lakhs. And then we will pass one more entry for the receipt of first call money. So this will be bank account debit to tell me anyone,
To
anybody?
share first call.
To equity share first call.
Correct. To equity share first call, which will be 2 lakhs here and 2 lakhs. Done. And now there is one last installment is still left, which is final call. Let me write down the narration for it, being first call money received. Okay. Now one last installment, which was the final call. All right. So let's do the journal entry for that as well. Fourth, on final call. Again, we need to first of all pass the journal entry for making it due, which will be equity share final call account debit. Entries are very repetitive. Every entry is almost similar to the previous. To equity share capital. All right. And how much we have received on final call? We must have received 30 rupees on final call. Yeah, 30. So that means we will be receiving 3 lakhs. So 3 lakhs, we will have to make it due first, 3 lakhs. And we'll pass the journal entry being final call due. And now we will pass another journal entry for the receipt of final call money, which will be bank account debit to equity share capital. Amount will be 3 lakhs. All right, is it clear?
Yes, sir.
Yes.
Okay, so narration will be being final call money receipt. Tell me everybody, everything is clear? Anybody having any doubt?
Clear, sir.
Ayan is asking, why did we multiply issued share by 100? Why did we multiply it with 100? Just a minute. Issued share. Okay, so Ayan, we multiplied issued share with 100, indicating the total value of share issued. We have issued 10,000 shares at rupees 100 each. That means total share capital has been issued. Sorry, total shares of valuing rupees 10 lakh has been issued to the public. So just to calculate the total value of share issued to the public, we multiplied 100 with 10,000. So as to get an idea how much we wanted to raise from the public. All right. Now, when we will total these value, we have received 2 lakh on application. We received 3 lakh on allotment. That means 3 plus 2 5. Then we received first call 2 lakh 5 plus 2 7 lakh, and then finally on final call we received 3 lakh. When you will total, it should be equal to 10 lakh, and we are getting that 10 lakh. All right. I hope this is clear. Ayan, now Alexander,
Yes, sir.
and everybody else. Halima, is this clear to you as well?
Yes, sir.
Okay, so this was about question number 3. All right, moving on, since it is clear to all of you, so now I'll move to the next question. Next, we will
What was the
discuss
rate?
question number 4. Sorry, Ayan, you're saying something?
Yeah, bank account, better to equity share. Being
Bank account debit.
being filed. Okay.
Done?
Yes, sir.
Okay, now see, let's start with question number 4. It says National Limited was registered with the authorized capital of rupees 3 lakh divided into 3,000 shares of rupees 100 each, which were offered to the public. Amount payable as rupees 30 per share on application, rupees 40 per share on allotment, 30 per share on first call and final call. These were fully subscribed and all the money was duly received, prepared journal and cash book. Now see, this question is telling us that the total authorized capital is 3 lakh divided into 3,000 shares of these 100 each, which were offered to the public. That means entire authorized capital has been issued to the public. Okay, see, let me simplify this question for you. Solution to question number 4. First of all, how much is the authorized share capital in this question? Authorized share capital in the question is, see, it is 3 lakhs. All right, 3 lakh, and out of the authorized capital, we have issued 3,000 share. Oh, sorry, entire authorized share capital has been divided into 3,000 shares of rupees 100 each, and we have issued the same for the to the public. That means issued share capital is issued share is also 3,000 equity shares, 3,000 equity shares of rupees 100 each. 100 each is basically 100 is what? 100 is the face value. Okay. Now it says that we have issued this on installment basis, since amount payable on application will be 30, 40 on allotment, 30 on first call and final call. So let's understand this. First of all, we will be receiving application. On application, we will be receiving 30 per share. Then on allotment, we will receive 40, and remaining on first and final call. So third installment will be the first and the last installment. First and final call. 30 rupees on first and final call. All right. Is it clear, everybody? Now we need to pass the journal entry. But see, question is, see, this is very, very important. Question is asking us to prepare the journal and cash book as well. Now this is very, very important. Whenever question requires, keep that in mind. Whenever question requires you to pass the, whenever question says just pass the journal entry. Whenever question says pass journal entry only. In that case, we will be passing the journal entry for the due as well as for the receipt of money. Both journal entries will be done. Whenever question just tells you to pass the journal entry, we will be passing the journal entry for the due as well as for the receipt of the amount. But whenever question asks you to pass the journal entry along with the cash book. Question also requires you to prepare the cash book as well. Now pay attention. In that case, we will be just passing the journal for the due. Due entries will be done, but we won't be passing the journal entry for the receipt of payment. No journal entry will be done for the receipt of payment. Instead, amount received against any installment, either it is on the application or allotment or first call or final call. Amount received on allotment, application, first and final call won't be indicated in the form of the journal entry. Rather, this will be receipt of payment will be shown in the cash book. You understand that? Whenever question asks you to pass the journal entry, that is it. In that case, you will be passing the journal entry for the due as well as the for the receipt. But if question asks you to pass the journal entry as well as prepare the cash book, then in that case, we just pass the journal entry for the due. But for recording the transaction relating to the receipt of payment, transaction will be recorded in the cash book. No journal entry will be done. No entry will be done. I hope this is clear, everyone. I hope this point is clear, everybody.
Yes, sir. It's clear.
Okay. Now see,
Yes, sir.
let me further tell you. See, let's suppose a question is asking us to prepare the journal, pass the journal entry along with the formation of the cash book. So what I mean to say is that when it requires us to prepare the cash book also, that time we won't be passing the journal entry. Bank journal entry won't be done. That means receipt journal entry won't be done for any installment, neither for the application nor for the allotment, nor for the post call, neither for the final call. This is not required. This amount will be directly shown under the cash book. I hope this point is clear. So if it is clear, now let's move to the solution of this question. But for this purpose, just let me erase all this. Okay. So let's first of all pass the journal entry. All right. And along with the journal entry, we will be forming the cash book side by side. So let me prepare the format of the cash book as well. I'm sure all of you already know how to prepare the cash book, right? Everyone, all of you know how to prepare the cash book. Cash book is just like it is prepared just like a cash account. So in the cash book, we have as usual two sides, debit and the credit side. On the debit side, all the inflows of the cash are recorded on the debit side and all the outflow of cash will be recorded on the credit side. All right, everyone. So let's now, first of all, start with the journal entry. Okay. So question says that we have issued 3,000 shares on which we will be receiving 30 on application. So the first journal entry will be for application. On application, what journal entry will be doing? First will be for on application of money. Tell me anyone, what will be the journal entry for the application? It will be share. Tell me anyone.
Sir, bank account, better to equity share application.
Sorry, I'm not able to hear you properly. Could you please speak a little louder?
Bank account debit to equity share application.
No, we won't be passing any bank transaction.
Yeah.
That is what I was telling you. We will skip the
Equity share,
bank. Mhm.
equity share
Equity share
application
application account debit
to equity share capital account.
yes, equity shares application account debit to equity share capital account. This is the general entry on application. Okay, and the amount will be, since we have received 30 on application, yes, against 3000 shares. So we will just multiply 3000 with 30. That means 90,000 will be received on application. So we will write down the narration as being this is the transfer entry being application money transfer to share capital. All right, everybody. What about the entry for the receipt of application money? See, receipt of application won't be shown in the form of the journal entry. Rather, it will be shown in the cash book. On which side? On the debit side or the credit side? Tell me. On which side? On the debit or the credit side? Anyone?
Sir, debit side.
Yes, share application. Share application. How much we will be receiving on application? 90,000, na? 90,000. That is
Yes.
3,000 into 30. 90,000. I hope this is clear. Is it, everybody?
Yes, sir.
Yes.
Yes, sir.
Share application account. Okay. Going back to the journal entry segment, we need to now pass the journal entry for the allotment. So for allotment, on allotment, journal entry will be, this time, journal entry will be equity shares allotment account to equity share capital account. Yes or no, everyone? Is it clear? Yes or no, everyone?
Yes, sir.
Yes, sir.
Yes. Okay. Now, anybody please tell me the value. How much we have received on our allotment? We will be receiving 40 per share. Na? So 3,000 into 40. That means 1,20,000. 1,20,000. Is it clear, all of you? And we'll pass the narration as being allotment money due or simply allotment due. And now we will pass the entry for the application allotment money received in the cash book share allotment account. Upon 3,000 shares, we will be receiving 40 per share. So that means 1,20,000. Tell me, everyone, is it clear? Yes or no?
Yes,
Is
sir.
it clear? Yes or no?
Yeah.
Okay. Then coming back to the question, the remaining amount, which is 30 rupees, we will be receiving this on the first and final call. So, and we will have to pass the journal entry for making it due, which will be on first and final call. What will be the general entry? It will be equity share first and final call account to equity share capital, right? And we will be receiving 3,000 into 30, which will be 90,000. And we'll write down being narration as being first and final call due. Right, and now we will record this in the cash book as well. So share first and final call. Amount received against the share first call and final call will be indicated in the cash book as share or equity share, equity share application, equity share allotment, and equity share first and final call account. $90,000. All right, understood. Is it clear, Alexander and everyone else?
Yes, sir.
Yes.
Okay, now since there is nothing on the credit side of the cash book, we will just total the cash book debit side. So it will be how much it will be 3 lakh. And since there is nothing on the credit side, so this will be the closing balance of the cash book. We'll write this as by balance CD will be 3 lakhs. And totaling both the sides, now we will get 3 lakh on both the sides. Tell me if it is clear, everyone.
Yes. So can you show
Yes.
first and final call?
Yeah, this is the journal entry for the same. I hope it is clear, all of you. If anybody having any doubt, please let me know. Otherwise, we'll move to the next question now.
No, sir, we will come.
Everything is clear? Okay.
Yes, sir. Yes, sir.
Okay,
Yes,
so
sir.
this was all about question number 4. Now let's move to the next question, which is question number 5.
Sir, can you show the entry?
Can you show me? Sorry.
So first and final call. Sir.
Yeah, this is the first and final call journal entry.
Right. And so the cash. So can you show the cash?
Sorry, Abhin, you are asking me to show the
Cash
cash
account.
book.
Cash book.
Cash book. This is cash book. Got it? Is it clear? Anybody having any doubt? Shall we move to the next question now?
Next question.
Yes, sir.
All right. So this is question number 5, and this question is little lengthy as it include the preference shares this time as well. Anyways, let's read the question once. It says Modern Marble Limited was registered with an authorized capital of rupees 10 lakh divided into 7,500 equity shares of 100 each and 2,500 preference shares of 100 each. 1,000 equity shares and 500 500 will be the preference share. 509% preference shares were offered to the public on the following terms. Equity share payable rupees 10 on application, 40 on allotment, and the balance in 2 calls of rupees 25 each. Preference shares, in case of preference shares are payable 25 on application, 25 on allotment, 50 on first call and final call. All the shares were applied for the allotted or an allotted amount due was duly received. Prepare cash book and pass the journal entry to record the above issues of share application. Record the above issue of shares. Okay, so let me just simplify this question for you. What is this question actually telling us to do? First of all, this question says that the total authorized share capital of Modern Marbles Limited is 10,000. Sorry, 7,500 equity shares are there, having the value of 100 each and 2,500 preference shares. So this means see, first of all, authorized capital of the company is given. Authorized share capital is 10 lakh, right? 10 lakhs. But this has been divided into equity shares and preference shares. Entire authorized share capital of the company has been divided into two parts: equity shares and preference shares, which is 9% preference shares. This is the name of the preference share. 9% preference share is the name of the preference shares. Okay, and equity share is of 7,500. Total equity shares are 7,500 divided into 100 each, having the face value of 100 each. That means 7,500 equity shares of rupees 100 each. So that means total, not 7,500, it should be 75,000. Yeah, 75,000. So that simply means that equity share is of 7,50,000 and 2,500 preference shares of rupees 100 each. 25, not 2,500, should be 25,000 now. Oh, just a minute. 7,500 into, yeah, that's right. This should be this is 7,500 and this is 2,500 into 100 each. That means total of 2,50,000. So basically, question is telling us that total authorized share capital of the company has been broadly categorized into two parts. 75,000. It contains 7,500 equity shares and 2,500 preference shares having the face value of 100 each. All right. Now, question further tells us that 1,000 equity shares were issued and 500 preference shares were offered to public. So not the entire 7,500 shares has been issued to the public. Issued share capital is how much? Issued shares is out of 7,500 equity shares. We just issued 5,000 equity shares. Not the entire equity shares has been issued to the public. Only 5,000 shares have been issued to public, not 5,000. It is 1,000. 1,000 equity shares has been issued to the public, having the face value of rupees 100 each, and only 500 preference shares were issued to public at the rate 100 each, and only 500 equity shares were issued. 500 preference shares, 500 preference shares, 9% preference shares were issued. So what is 9%? 9% is the name of the preference shares. At the rate 100 each. So both the type of shares have been issued on at par, at face value. Okay. Now questions tells us that for the equity share issued, we will be receiving rupees 10 on application, 40 on allotment, and balance in 2 calls for 25 each. So that means in case of application, in case of equity shares, on application, we will be receiving 10 rupees. On allotment, we will be receiving 40 rupees, and balance in 2 equal installment. That means on first call, how much is the balance amount? If the face value of share was 100, then what is the remaining value? Tell me. Out of 100, we have received on application rupees 10, 40 on allotment. That means remaining is 50. So that will be received in 2 equal installment. That means 25 on first call, and remaining will be received on which call? Tell me.
Final.
Final call.
Yes. Final call will be 25. Okay. But in case of preference share, question says that against preference share, we will be receiving 25 on application. On application 25. On allotment as well, we will be receiving 25. All right. And 50 on first and final call. So there are only 3 installment in this case, first and final call, remaining 50 rupees. Okay, everyone. And question is asking us to prepare the journal, pass the journal entries, as well as prepare the cash book in this question. So that simply means that we won't be passing the journal entry for the receipt of application, allotment, first call, final call, or any other thing. We will just be passing the journal entry for making it due. No entry for the bank or cash will be done. I hope this is clear, everyone. Is this question clear until now?
Yes, sir.
Yes, sir.
Okay. So we understood that the total authorized capital of the company is 10 lakh. Out of the entire authorized capital has been divided into 2 broad categories: equity shares of 100 each and 9% preference shares of 100 each. Then out of the 7,500 equity share, companies just issuing 1,000 equity shares to the public for the subscription, and 500 preference shares for this subscription. And question gave us the information about the various installment in which we will be receiving the payment against the equity share and the preference shares. Okay. So first of all, let's pass the journal entry. Let's just start with the journal entry quickly, and we'll then prepare the cash book for the question as well. Journal entries. Okay. So first of all, let's start with the journal entry, and first journal entry will be done for the application on application. So first, see, we will pass the general entry for the application for the preference and equity share at the same time. Keep that in mind. General entry for application will be done at the same time. General entry for the allotment will be done at the same time. All right. So first, we will be passing the general entry for the application of the equity share as well as the preference share. So let me show you how we will be doing that. First of all, we will pass the general entry for making it due. So that will be share application account debit equity. So equity share application account debit to equity share capital account. Being application money transfer. Share capital, and then we will pass the general entry for the application of 9% equity, 9% preference shares. For that, it will be 9% preference shares capital account debit to preference share capital account, and we will write down the narration as well, being preference share application transfer to share capital. And we will write down the amount on share equity share application. How much we have received on application? We received 10 rupees on application. So the amount will be, in this case, against 5,000 shares issued, we received 10 rupees each. That means 50,000 has been received on application. For preference shares, we have issued 500 preference shares, right? And on each share, we have received 25. So 500 into 25. All right. So that means 7,500. Is it clear, everybody? Yes or no? Tell me if anyone having any doubt, understanding anything in it.
No doubts.
Tell me, no doubts.
Sir, can you explain this entry once again?
You want me to explain it again?
Yes, sir. Only the second entry.
Yes,
Preference.
Just a minute. I think how much we have received on application? Oh, sorry, how much equity share we have issued? I guess we just issued 1,000 shares. Huh? Just a minute. It should be multiplied with the 1,000. 1,000 into 10. That means 10,000. And we have so this will be, this should be not 7,500, it should be 12,500. No, I'm sorry. It should be 12,500. Yeah, someone was asking for the doubt, sorry. Anybody? Who was asking the doubt?
Yes, sir.
Yeah, please tell me your doubt.
Sir, can you explain this preference share entry once again?
Preference share entry is similar to the equity share application entry. Na? See, what do we usually do whenever we receive what do we do to transfer the share application to share capital? We pass the journal entry equity share application account debit to share capital account, right? We will do the same for the preference share as well. Preference share capital account debit to preference share capital. So this journal entry is same as this one. Both the journal entries are same. Only the name is different, na? Preference, instead of writing down the equity share, this time we have received preference share. See, we have received equity shares of 1000. At the same time, we also issued 500 preference shares. So we will be passing the journal entry for the receipt of application money for both the kind of share at the same time, which will be equity share application debit to share equity share capital, and for preference share it will be preference share capital account debit to preference share capital. Preference share application. Yeah, you're right. I think I made a mistake here. 9% preference share application. Oh, I'm sorry. 9% preference share application account debit. It should be now. Is it understood now? Is it clear to you? It will be
Yes, sir.
12,500.
Yes.
Okay. So this is the entry for the application. Now we will be doing the journal entry for the other, for the allotment, for the first call, for the final call in the same way. But wait, we need to show the receipt of application money on equity share and preference shares in the cash book as well. Na? So for that, we will be writing down this as equity share application. We will be receiving on equity share application account 10,000, and for preference share we will receive on against 9% preference shares application account 12,500. Got it, everybody? Is it clear, all of you?
Yes.
Is it clear, everyone else? Please tell me if it is clear or not.
Yes, sir.
Okay, so guys, since we are already out of time, so I'm giving you the remaining part as the homework. You need to pass the journal entry for the allotment, for the first call, and for the final call, for the equity and preference share, and accordingly pass the form the cash book for this question as well. I hope you will be able to solve this question. Halima, Mariam, Ayan, Pranav, Sania. Just tell me if anybody having any doubt. Do you think you will be able to solve this question, guys? Eben,
Yes, sir.
Alexander.
Yes, sir.